Ladies and gentlemen, welcome back to the channel. We have some big news to share with you that is causing stocks to hit a new all-time high. I will share all of your major news and headlines in this video. What's likely coming next for markets, how we can start to see this trade war that we have been in start to really die down. Now, it does clash with a little bit of negative seasonals heading into August, into September, and there is this overarching kind of big bad wolf, if you will, that is the secondary tariffs on countries that purchase Russian oil. That would be China, that would be India, that would be a really bad situation. We're still a little early here, but perhaps it's time to think about what you're going to do in your portfolio if we did get these tariffs going into effect. Now, we're going to get into all of this in this video. We do have some earnings as well today that you need to pay attention to. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. And let's get started. Now, I will also tell you, we do have two clips from CNBC I want to share with you, one of which from Ryan Detrick. I know, like, Tom Lee gets all this credit and attention, and to his benefit, like, he's been spot on. He's been correct. He's, Tom Lee is, I think, one of the greatest investors of this generation, right? I think that's what his legacy will be. But Ryan Detrick, man, he is so underlooked, appreciated for his perspectives. And what he just said on markets, I think you need to hear. So that's one of the clips. And then I do have one more that I think you should also listen to. So let's start with the big news of the day today. The big news of the day today was this: the EU and the US near a trade deal with 15% tariffs. The EU and the US are close to a trade deal setting 15% tariffs on European imports to avoid President Trump's planned increase to 30% on August 1st, sources told the Financial Times. Some products, including aircrafts, spirits, and medical devices, would be exempt. The deal would lower car tariffs from 27.5% to 15% and effectively maintain current tariff levels. As EU exporters have faced extra tariffs since April, the EU is still preparing a $93 billion euro in retaliatory tariffs if no deal is reached by August 1st. A U.S. official noted that talks remain fluid. What this looked like to me was Trump's way of testing the waters, okay? I think Trump is happy with that, trade deal, okay? And it seems like this administration, before they do anything that is like irreversible or will make them look too bad, they go out, they put these headlines out there and see how the markets react, okay? Literally, like everything that has happened, there's been kind of headlines that have come out to test the waters first. For an example, Trump was definitely thinking about firing Powell. They put out those, headlines to test the water. Markets instantly sold off, had a very negative reaction. Bond yield skyrocketed. Within an hour, Trump comes out and he says, yeah, I'm not thinking about firing Powell. Okay, when it came down to the China tariffs, okay, and pausing China tariffs, what happened? There was some rumors that Trump was going to pause tariffs on China. Markets rallied. Next day, Trump comes out and pauses tariffs on China. He's always trying to fish, if you will, to see what the markets will like, what they don't like. And I think that is part of the decision making on Trump's part at this point. Now, it was also reported last night that Japan and the US are coming to an agreement on a trade deal as well, that the tariff rate on Japan could come down from 25% to 15%, and that deal could be announced very soon. That's what kind of started this rally in after hours last night. Around 8 p.m. that news came out. And then this morning, it was the news on Europe. Now, let me tell you, essentially, once you get a European trade deal done, it's over with. Now, the big bad wolf, if you will, is what happens if the war in Ukraine is not over with after the 50-day deadline or so. And now Trump has threatened to put 100% tariffs on, the countries that buy Russian oil and natural gas. If Trump excludes China there, we really don't have an issue. The issue would be with China. If there's a 100% tariff put on China, it would really just destroy all of the progress we have seen with, China-U.S. relations. And while China-U.S. relations seem to have gotten better in recent weeks, Trump has actually publicly said some very favorable things towards China, even acknowledged the AI trade war that we are in right now. Those ties are still going to be fragile, okay? And there's still not an official deal that is actually signed yet for trade. So Trump, if he threatened this tariff and he has to put it on, that's going to be an issue. Now, here's the deal. Again, we're still too far out for Wall Street to get super bearish on that. Things can change. We're not going to have a 10% crash because it's still so relatively far away, right? Over a month away. It's too soon to start pricing that in as a dramatic near-term risk for markets. But this is where you got to use your best judgment, okay? If you have big gains in stocks, in certain stocks that maybe you're not as bullish on over the next couple of years, perhaps it could be a time to trim some of those positions. Personally, I'm not doing that yet because I'm investing in small cap AI stocks that are under the radar, that are under discovered, that haven't been discovered yet. Even if I'm up like 50% on a lot of these stocks, okay? We're up a lot. The portfolio year to date is up like 90%, okay? I'm not personally doing that yet, but I have done that recently. Like Robinhood, great company. I think they're going to do well over time, but it's up a lot from the crash lows back in April. And the law of large numbers, I mean, it's a $100 billion company now. Do I think it's going to double again in the next 12 months? Probably not. Whereas some of these other stocks we're investing in the trading community could easily, double 5x, 10x within the next year because they are undiscovered, because they are diamonds in the rough, if you will. Again, check that link out down below in the description if you would like to. But again, all I'm going to say here is if you're going to beat yourself up and not have conviction in the stocks you're owning, if we did go through a correction in August or September, just take your profits now. Okay? That's the harsh reality. Don't wait until, markets do come under pressure and then beat yourself up when you lose some of those gains. Okay, because that could come. That is still a possibility. Although I think there could be upside further for markets, potentially to that 650 level here over the near term. And then honestly, like any kind of correction I see is not going to be anything too major. Personally, I don't think Trump's going to put a 100% tariff on China, but anything's possible. Again, this is a main theme for the next decade. A lot of people ask me if they're too late to a lot of the stocks that we are investing in, right? A lot of the under-discovered or undiscovered AI stocks or just AI in general. People think they're late. Like this mentality of you're late really needs to stop because you're not even halfway through the first inning. Okay. Some areas, sure, like NVIDIA, it's probably inning 4 or 5 for NVIDIA, right? But AI as a whole, you're not even to inning 1 yet. You're like a quarter, maybe halfway into the first inning. We are so early, it's stupid. You're going to look back 10 years from now and say, wow, I was one of the early investors in AI. I know it's a crazy thought today, but as more use cases come about, as more companies come about, you will start to realize this is very early stages for AI and even early stages for the AI Cold War. We are in an AI Cold War with China. We are also in an AI war internally in this country. So not only do we have the pressure of China competing with AI, we have, Google competing with large language models. We have other software companies competing with each other. And this is really going to help do one thing: drive innovation, drive adoption, and fuel capital investments for years and years to come. Like Google, can they stop spending in AI? Absolutely not. Can robotics companies stop spending in their businesses in AI? Absolutely not. Because the risk is you lose in AI, and that could be the ending of your company, right? There's going to be so much spending in AI over the next decade. Like, I think everyone is underestimating the potential of AI. France's President Macron says we want to provide stability and have the lowest tariffs possible. Macron says we will coordinate the EU response to US tariffs. Germany's chancellor says we are hearing now that there could be a decision on trade. Also in the news today, Iran worries that the US will use nuclear talks as a pretext for new attacks, Axios citing an Iranian senior official. EU diplomats, quote, a broad majority of EU members would support using anti-coercion instruments in the event of no US trade deal and US tariffs of 30%. EU member states are set to vote on 93 billion euros of counter tariffs on US goods Thursday, according to EU diplomats. Also in the news today, subprime auto delinquencies have now surpassed 2009 levels, reaching a 15-year high according to Fitch. White House says the AI plan calls for open source and open weight AI models to be made freely available by developers for anyone in the world to download and modify. U.S. House Speaker Johnson begins work on a follow-up tax bill seeking a fall passage. He expects the second bill to be smaller in scope. And the White House says the AI action plan identifies over 90 federal policy action. White House says the U.S. will remove onerous AI development regulations. So again, opening up the floodgates, if you will, to innovation. The White House says Trump is to promote rapid build out of data centers for AI. Trump on Truth Social says, I will only lower tariffs if a country agrees to open its markets, if not, much higher. Trump says our businesses will make a fortune from the Indonesia deal. Trump says that housing is lagging because Powell refuses to lower rates. Again, calling on Powell to cut interest rates as soon as possible. Trump says Japan agreed to buy billions worth of military equipment. Trump says, remember, Japan is for the first time ever opening its market to the US, even to cars, SUVs, trucks, and everything else, including agriculture and rice. Hasbro's CFO says current China tariff rate is more favorable, but rates remain fluid. Lutnick says Trump has decided that China can buy H-200s in a balanced way. Lutnick says that Trump is looking for the EU to completely open their market. Lutnick says if the EU accepts US products, the standards will move Trump. The US Commerce Secretary Lutnick says the Japan deal could be a model for an EU trade deal. And he says the Japanese have bought a lower tariff rate on cars. Now, that is really all of your big news today. We do have some earnings coming out as well. Here in After Hours, you have Tesla, Alphabet or Google, ServiceNow, IBM, Chipotle, QuantumScape, Alaska Airlines, O'Reilly Auto Parts, Molina Healthcare, and United Rentals. Tomorrow, pre-market, American Airlines, the Blackstone Group, Nokia, Dow, Southwest, Flex, Union Pacific, NASDAQ, Keurig Dr. Pepper, Honeywell. In After Hours tomorrow, Intel, Newmont, Deckers Brands, Scholastic, Boyd and Coursera, and then Friday pre-market, a bunch of healthcare names. Now, take a listen to what Ryan Detrick says about this market on CNBC.
Welcome back to Closing Bell, everybody. We're on track now for a record close for the S&P 500. Our next guest says the summer rally still has room to run. Joining me now, Carson Group's Ryan Detrick. You are particularly optimistic right now about the summer rally. Can you talk about a little bit about what is going to fuel that even higher?
Yeah, thanks for having me back, and good afternoon, everybody. So there's a couple things. I think the one thing that's fascinating to us at the Carson Group is this market's hitting all-time highs as we're talking. There's not a lot of optimism. I know some of the meme stocks are starting to do some things there, but when we look at just investor sentiment polls, there's like 39% bulls, 39% bears, right? You look at big money. Last couple of weeks, they've decreased their bullishness, and the big one is hedge funds, which have missed the majority of this rally, have the largest short position on the S&P S&P 500 since early April. All right, that's a lot of fuel, in our opinion, to keep this rally going on good news, whether it be earnings or maybe inflation continues to improve or the economy avoids a recession, whatever it is. Those lowered expectations to us, we said it'd be a summer rally. It wasn't popular. It's happening. We think it's not over yet.
When you look at the sort of sentiment that is driving the meme stocks and driving the momentum, would you consider that to be frothy, or is it just optimistic?
Yeah, I think more optimistic. I mean, listen, you talk to 10 people, get 10 answers on this one, and it's just started to flare up again. We all think back to GameStop, of course, in 21, and that was near a potential peak. But again, when we see what hedge funds are doing, large institutions, I mean, they've missed this rally. They have to get back in. And what's like one of the best sectors this year? Industrials. Industrials are like doubling the return of the S&P 500. It's not like that's a group everybody's jumping up and excited about, with financials and technology, with the right groups, the I guess we'll call it the offensive things leading. That's what matters to us. Yes, you've got the optimism with excitement, I guess we'll say, with the meme stocks, but big picture, there's just a lot of money that'll still push this higher, in our opinion.
We are about 8 points higher than we were yesterday on the S&P 500. So if we stay where we're trading, it'll set another record day. Are you seeing signs that are particularly bullish on the S&P?
Yeah, the first one, I mean, listen, today's barely up, right? It feels like we haven't had a big day in a while. We haven't had a 1% down day in S&P since before Flag Day, okay? That was in the middle of June. What's the old saying? Don't short a dull market, right? This is pretty dull. Now, one that's fascinating, the S&P 500 has been above its 20-day moving average for almost 3 months now. That's the longest streak since 1998. We went back 50 years. When you go about 3 months above that short-term trend line like we are right now, and then you start the clock, what happens next? 1 year later, up between 19 and 26%. A year later, higher every time, and higher 6 months later every single time. So the reality is this blast of strength the last 3 months, in our opinion, is extremely rare, but it tends to take place, at the start of a new bullish phase. I know it sounds kind of crazy to say, but that's what we're seeing here.
Rick Rieder was just on with me, and he doubled down on this generational opportunity, both, he says, in tech and where bonds are concerned. Give me your view on what are traditionally seen as hedges right now and how those fit into your thesis.
Absolutely. So we've been underweight bonds for a while. We added some treasuries earlier this year for the first time in a while. But the big theme we've had is diversify your diversifiers. Think about a 60-40 bucket, right? 60% stocks, 40% is the other stuff. We'll talk about the other stuff. We added gold for the first time in our tactical models back in April of 2023. Just recently added some more gold to more of our longer-term strategic models that we run for our Carson partners. So we like that. We've got some managed futures in there. We have some cash. I mean, we're not too warm and fuzzy on bonds, but we do think there's other areas that can help you diversify your portfolio. But at the end of the day, we're still overweight stocks. We still think that's the way to go.
You can see on the day today, the Dow is up 0.97%, S&P is up 0.55%, NASDAQ is actually lagging behind, only up 0.26%, the Russell 2000 up 0.93%. Look at the VIX here, down almost 7% today. So it does look like some of the trade risk headlines are kind of going away. 10-year Treasury yields are actually up 5.5 basis points today. It says 10-year Treasury yields tick higher after Bessent reassures market over Powell's position. Just the other day, markets were concerned that Powell could get fired, and that would be bad for interest rates. Apparently, it's bad for interest rates if Powell stays on. Like the markets right now, Wall Street is a little delusional. They don't kind of know what to expect or what's good or what's bad. We do know, though, that Powell is done in May, and there's a new governor's position opening up in January. So effectively, Trump is going to kind of be able to get what he wants coming next year anyways in regards to the Fed. So Powell being removed is not much of a worry at this point. Getting trade deals out the way and having geopolitical tensions die down, getting the threat of Russia's secondary tariffs off the table is the next big positive catalyst that markets are going to be looking for. But again, who knows what's going to happen there? There is going to be some volatility in markets if we don't see a die down of the 100% additional tariffs on countries that purchase Russian oil. That's a threat. That's a possible outcome. I would say there's a 20 to 30% chance at this point that could actually happen, that those could go into effect. So when there is a chance of this, you have to think ahead. You have to pre-plan for this. And again, the way that I'm doing that right now is if there are stocks I don't exactly believe in, that I'm not super convinced of over the next couple of years, and I have big gains in those stocks, I'm trimming them, right? And I think that is something prudent that everyone can do as markets are hitting new all-time highs. That goes without saying, but I think a lot of people don't want to miss out. And you have to remember, you have to weigh kind of the risk reward, the balance of, hey, do I want to miss out? No. Do I want to lose all my profits? No. What are the odds that markets could go through a little bit of downside in August, which is seasonally a rough month, okay? And September, which again is going to run into that Russia tariff deadline. So just some things to start thinking about, although today markets look pretty good. Hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.